I recently found myself watching an episode of Shark Tank, and in that episode, the founders were talking about Amazon. More importantly, just how much their business relied on Amazon for the entire reach that they could target for much of what was driving their revenue. And on the flip side, they also talked about how the fulfillment fees were so high on Amazon, yet they really had no other choice. Their hands were tied due to the amount of reach that Amazon had and provided them as a platform. Now, as a viewer, this led me to think that, hey, Amazon has a pretty solid business here. I use it, I'm sure many of you use it, and it sounds like even businesses rely on it and can't really go away from Amazon. Sounds like they have a good moat, so I went looking to see is there any kind of technical analysis edge here, a reason why I might want to get long. The first place I started was Fibonacci levels, and if we draw using the two pullbacks in this recent uptrend, there's two key pullback areas that I found. One was at 192.93 and the second was at 177.38. This is on the weekly time frame chart. If you come into the daily time frame chart, you can see how price feels like it's stabilizing somewhere in this 192.93 zone. On the weekly chart, the other thing that stands out is the number of weeks that we've seen the sell-off. Now, using our free candle counter indicator, we can see that the max number of red weeks that Amazon has had, and this is over 20 years, has been 6. That means 6 red consecutive weeks before we saw a green week. Now, in this recent downturn, we got all the way up to 5, and you might argue that even though this was whatever you want to call a green week we're right back to resuming this red week, which might be a place where you call that price action's exhausted, and we're looking for another reason for at least a short-term bounce. Now, what's interesting is if you backtest Amazon through a bunch of different backtest examples, you'll find that the strategy P&L is negative. However, if you come into something like XLY instead, so now you're using the ETF in lieu of Amazon to try and play the same ORB breakout move, and we come back to a half range stop or half range target and a full range stop, you'll notice that you're able to actually find some nice lucrative trade examples where you're still playing this overall idea of trying to get long Amazon with the ORB setup, but using a different asset vehicle to do so that relies predominantly on Amazon for tracking its movement, and that's XLY. So here's a 15-minute breakout. If we repeat the exercise with a 30-minute breakout, doesn't look so good. And on the 30-minute, if I expand this, that doesn't help. And let's see if on the 15-minute we expand this, if that helps. No, so we're seeing the sweet spot here is the half range target, the full range stop, XLY. It's been working over the past 90 days. Let's see if it's worked over the past year. Continues to work over the past year. We could zoom out. It started with looking at Amazon, ended up switching to XLY here, which also has been selling off also into interesting levels here. Use that as the proxy and just automate your entire entry using the opening range breakout setup, and now you have a strategy that works for you. I hope you found this video helpful in giving you some ideas of taking Amazon, taking what was really just a Shark Tank idea, a silly Shark Tank idea, turning that into some Fibonacci levels, going from Fibonacci levels in Amazon to running a backtest on Amazon, seeing that Amazon didn't backtest well, switching that to an ETF, a top holding, XLY, or an ETF where Amazon's a top holding, and using that where we found a nice opening range breakout setup that we could use. One in which we're taking advantage of the half range target, a full range stop, maybe even have a little pullback opportunity, and now all of a sudden you have a one-to-one risk to reward trade. Hope that helps. Take care, everyone. Good luck trading, and I'll see you in the next update.